So we're going to continue our digital asset conversation journey here with a wonderful panel. I'm super excited to hear more about their thoughts on tokens, crypto, stablecoins, and central bank digital currencies, the new era of finance. We're going to have John Ho, Head of Legal Financial Markets at Standard Chartered. We have Bjørn Krog Andersen, Chief Compliance Officer at Banking Circle. Tobias Seidl, co-founder and co-CEO of STOKR, as well as Emilie Nagata, Managing Director, Luxembourg Zodia Custody, in a conversation moderated by Emilie, Allaert, founder and CEO of Digital Minds. Please give them a huge round of applause to welcome them out onto our stage. Huge round of applause.
Yep. Tobias se met à côté. Well, good afternoon, everybody, and welcome for this interesting conversation on tokens, CBDCs, and cryptos. I'm really pleased to be moderating this panel today, and I hope you will survive the heat. Buzzwords such as stablecoins constituting roughly 235 billion in market capitalization. CBDCs are flowing in the media over the last few months. Digital assets actors are actually offering more traditional instruments lately. Regulation is finally picking up. And since beginning of the year, we have MiCA, we have also DORA and its issues. Goodbye USDT also, or Tether for those who are new to this. And we are also welcoming new actors. With my panelists, we will embark on a journey to the future of finance. But first, what's happening right now? So with Emilie Nagata, who is the Managing Director of Zodia Custody, who is a global digital asset custodian based in Luxembourg. For the past 13 years, you've been managing digital assets, crypto. What is, in your opinion, what are the key challenges and opportunities that you see in securing these diverse digital assets for institutional clients, and how regulation has been impacting your offering?
Thank you. Is this okay? Do you hear me?
Yeah.
Okay, thank you. So we're seeing more and more involvement from the institutional clients, players, into the digital asset world. Okay, this is very weird. And compared to 2-3 years ago when we started talking about crypto, the change is remarkable. Back then, when I talk about crypto to banks, they were like, why would we, right? But now they're really into this. There are a lot of banks who are starting to offer crypto to their customers. So the change is remarkable, indeed. And for us, the main challenge is that to cater for the diverse requirements for those institutional clients, because when we talk about crypto, it's not only Bitcoin, right? It's a crypto native asset. There's stablecoin like EMT, e-money token. There's tokenized funds, and each one of them have different implications in regulatory context. It's not only about MiCA. MiCA is very welcomed in the industry for harmonizing all the standards in the EU, and that's great. Now we also need to look into MiFID for certain tokens. We also need to now look into PSD2 based on the EBA letter that was published last week. Was it last week? Now the CASPs who do custody and transfer of assets of EMT will need to have a license for payment institutions. So all that regulatory changes or environment is fairly challenging, I would say, but it is making things interesting. And also the important thing, I think, is for the industry to keep a close tie with the regulator so that we can make sure that the Luxembourg, let's say Luxembourg ecosystem is competitive and then still offer the safe environment for the customers.
Well, thank you, Emi. Tobias Seidl, you are the co-CEO of STOKR, which is an investment platform specialized in the tokenization of securities on the Bitcoin blockchain. You recently surpassed 1.2 billion in tokenized assets. Congratulations. And you exceeded an annual revenue targets in just the first quarter of quite important. Now operating cash flow positive, so quite good for STOKR, which I've known for quite a few years now. I have a question. How are you seeing the real-world assets evolving, and especially what are the primary drivers for its growth? I think it took time to pick up, so what's the current status?
The current stage right now is like we see, like I think as Amy, I built on what Amy has said, like a lot of institutional interest. But I want to go also like one step back where we are coming from, because when we started like our company in 2018, there was no market for security tokens, was adoption actually by institutional players, no relevant adoption of security tokens at all. So looking at that time, there was like a need to create also like a market. And when creating a market, we looked at Bitcoin, because Bitcoin not have only like an extremely tech-savvy audience, like a community, but an incredible amount of wealth. And at that time, that was the time when yield products on Bitcoin evolved, and on this train we jumped with the Blockstream mining node, which was an extremely successful product. Now, these kind of yield products we see now coming more and more and more into the institutional place. So, because it's very difficult to do a yield on Bitcoin, right? You can do trading, but then you have like 3 to 4%. What we are providing with, for example, the Blockstream mining node, you have a much higher percent, because like you're directly linked actually to Bitcoin mining activities. So these kind of products we see right now coming to the institutional place. And final word, I've been last week at the ABS Global, the largest asset-backed securities conference in the world, and there you see big interest from the likes like Standard Chartered, JP Morgan, also Barclays, and the bigger players coming into the space, not only because of the technology, but also because of new asset classes in the sense.
Thank you for this. So definitely picking up, and we will see developments in the future. Bjørn, you are the head of compliance at Banking Circle. You issued a MiCA compliant euro stablecoin, which is listed on Binance. Bjørn, Banking Circle facilitates cross-border payments. How do stablecoins and potentially CBDCs fit into your vision for more efficient cross-border transactions? And what's the current adoption status? There is so much buzz around it. We are seeing so many initiatives about new stablecoins. What's currently happening?
Yeah, correct. We see a lot of interest, and I think you can say the year 2025 is not only the year of the snake, it's also the year of stablecoins. Right? Everyone's talking about it. It's the new black, also within payments. And there's no doubt that if the US goes ahead and they adopt the Genius Act, you will see a lot more stablecoins coming rushing to the market, from Asia to Middle East to the US. We just saw an IPO being subscribed like 5 times over by Circle, and now it's trading at $120, making Circle worth plus $10 billion. So yeah, there's a huge interest. I think where we see and it has the potential to really disrupt the current status of traditional cross-border payments, because SWIFT it's not like SWIFT is sleeping, but SWIFT is just not working very well. They have projects called Nexus. You've got other projects between, by government banks and central banks, but it's not been able to really crack the instant settlement need that consumers and businesses would like to see. So we see there's a huge potential. I think it becomes more blurry when you talk about the different use cases. Like, for example, Euro, SEPA instant payments. Do we really need stable coins to replace that? No, we don't think so. We think that if this instant SEPA scheme works well, and it's very cheap and secure, we would maybe not need stable coins to replace that. But when you talk about traditional finance, B2B payments, larger payments, cross-border involving different jurisdictions, then it's got huge potential. But again, in in the bigger, broader view, it's still a small percentage. It's still very small. It's still in its early stages. And a lot of things will have to happen for banks to adopt really into this.
Yeah, so a lot to observe in the future months, and we'll hope 2025 is the start of the adoption and 2026 is really the full adoption. John Ho, you are the Global Head of Legal Financial Markets for Standard Chartered. You have supported digitization in Standard Chartered and adoption of new or innovative technology initiatives such as blockchain, distributed ledger technology, and smart contracts. And you recently contributed to a publication issued by the World Economic Forum on asset tokenization in financial markets. You have the global bank perspective being also outside of Europe. Where are you seeing the most traction and demand from your clients for these digital assets today?
Yeah, I think earlier we talked about the sort of stable coins. We talk about obviously crypto, but I think one thing we need to focus on is what's the biggest price here, right? If you look at the world of financial instrument, it's much larger than crypto. It's also much larger than stable coins. And if you look at Larry Fink's statement, we will move to the world of tokenization of real world assets. And it's not like it's fiction, it's real. Just last year alone, Switzerland itself have exceeded in terms of security token more than $1 billion in issuance of digital bonds. If you look at what is happening out there, the tokenization of real world assets is huge. If you include the bond market, if you look at the securities market, if you look at the real estate, you're talking about multiples of trillions of dollars compared to the $2 or $3 trillion just in crypto alone. And that is compelling. This year alone, which is public, we assisted China Asset Management to tokenize in Asia the first retail money market funds. And what they want to do is basically allow for investor to have access to composable exposure, composable finance, and also allow them to settle across multi-chain. The other aspect we're seeing is in the aspect of payments. Earlier we talked about stable coins. Stablecoin last year, volume-wise, have exceeded the combination of Visa and MasterCard in transaction alone. So just let that sink in. We're not talking about stable coins. This is for cross-border payment. It's 14 trillion in transaction last year in stablecoin. It's growing. The volume of stablecoin the last 5 years have grown 10 to 20 times. And as we speak to date, it's about $250 billion in market capitalization. So stablecoin is not just doing for crypto. The regulated stablecoins are used for purposes of cross-border payments, and also increasingly are used as a means, as collateral in institutional finance and financial markets. The third element that's important, we talk about all these assets, is having a safe custody, a custody that is investment grade, right? So one of the things we need to be very careful is to make sure that if you lose your keys, you lose your assets, especially in permissionless blockchain. The idea of creating a digital secure wallet, an investment grade sort of custody is key. So I would say that if you look at where things are, the institutional adoption is only going to increase. There are still challenges, but I think the sort of innovation ideas we're looking at is increasing. So right off the spectrum, we have looked at digital CBDCs. Increasingly, central banks and private banks are also looking at and tokenized deposits. And what it means is you need the cash leg together with tokenization of assets to actually realize the benefits of instant payment, atomic settlement, programmable payments, and atomic settlement to reduce credit exposure, credit counterparty risk. That unlocks capital, that allows for composable finance, and the potential is immense.
Thank you. So we are seeing that definitely digital assets are changing a little bit the market as we know it and the traditional players. Amy, how is the role of the custodians changing as digital assets are also evolving and are starting to impact core financial processes?
So historically, digital asset custodians were not a mainstream. People will keep it at the exchange or self-custody them, and that was how it was done. Now, with the rise of all the hacking and the frauds and the social engineering attacks, people start to say, this is not working very well. So then they turn to custodians who should know how to safeguard the keys and the assets, and that is bringing some kind of an alignment with the traditional asset. Because, for example, if you think of equity, you're going to buy it in a stock exchange. You'll never keep it at a stock exchange. You will always keep it at a custodian or a depository or whatever it is. So just like that, crypto or digital assets are now traded on exchanges and then kept at a custodian. And that's how things are starting to go that way. Now, when that happens, the holders of crypto would say, well, but I want to do something with that crypto. So then here comes the staking services. So custody providers would allow the customers to stake their assets in addition to being in a safe environment. Or they offer, let's say, off-venue settlement. So to have a partnership with an exchange and then mirror their asset to their exchange account, and then they trade. They settle it on a periodical basis, depending on the contract, I don't know, daily, 6 hour, whatever it is. Or some custodians also offer collateral management. So they start to have more of those value-added processes, not just keeping the asset and then doing nothing about it. So that's what I see.
And that's quite of making the link with the question I have for Bjørn, actually, on the fact that we've seen the stablecoin market is in full expansion. There are new initiatives. We do not know where to look into. Do you think it will drive institutional expansion? And what are the regulatory aspects of it? Is there still something missing, or we are good to go?
No, there's a lot of bricks still open, and the puzzle is still a bit scattered. So, for example, most of the bigger stablecoins, they're privately issued. Where's the money behind it? What are the rules for that? With MiCA, we came a long way. But now we will see different countries issuing different stablecoin acts with different requirements for the safeguarding, for the cash element. So you will still need to be quite advanced to find out which stablecoin is good for my use case and which one should I try to avoid. And I think we will see a lot of players now coming out to create that interoperability, connecting the fiat and the stablecoins. That's going to be key for the next year or two. Circle is doing one attempt with this Circle Payment Network, CPN. But to connecting privately held issued stablecoins and banks and fiat, that is where the puzzle is still a bit open, I think. And then you have coins that the most worldwide adopted coin, the USDT, is very difficult to trade in Europe nowadays with MiCA. So that creates also some regulatory burdens, some regulatory restrictions that we will need to try and solve. So that's where I see the regulatory play interact. How will that map look like in a year or two from now?
Yeah, especially given that we are in a global market, a global place, and if you want to provide a stablecoin for Europe, it's not fitting the needs for the global market. So how do you adjust to that?
Well, we try to promote our own coin and kind of move along, be on the forefront of this technology rather than behind. So that's why we issued our own. That's why we know mint and burn. That's why we use custodians. We embed that into our system. So like we issue bank accounts, we will one day issue wallets, probably by a third party. So I see that you need to pick up your phone, and then you will see your bank accounts and your wallets in one place. and also for the businesses, one place to integrate, one place to make reconciliation instead of logging into 4 or 5 platforms. That interoperability is simply the key for mass adoption.
Okay. John, there is a real uptick right now in the corporate and the institutional world, especially regarding their interest in digital assets. What are the barriers that still exist that you're trying to get rid of? And how do you manage the compliance requirements, being a truly global bank? Because we have MiCA, we have so many different compliance requirements.
Yeah, as Bjørn mentioned, there are still frictions in this ecosystem, which is very new. A couple of things that obviously is creating a bit of barriers, but it can be overcome. The first thing is regarding what is the classification of the digital token? Is it property? Is it security? Or is it something else, right? So one, we need to come out to what we call a regulatory alignment in terms of how you treat the types of digital assets. The second thing is ensuring that when you treat them, that if they have capable property rights, are they able to be mortgaged? Are they able to create security interests? What are the legal and regulatory protections around it? Because if you own a property, if you own securities, you currently have consumer protection rights. However, if you own digital assets in many countries, investor protection, consumer protection rights may not and does not exist. So I think that needs to come hand in hand. And thirdly, also is to ensure that how do we treat it from a tax perspective as well, because in many countries, the treatment of the types of token you hold, especially when you move cross-border, can come up with different results. Some of them are taxable as income, some are taxable as a trading income, and I think we need some alignment with that approach. Thirdly is, as Bjørn mentioned, interoperability. A lot of the chain, whether it's public chain and private chain, may not talk to each other, and therefore the movement of tokens from one or to one system to the other may not be as seamless as we talk about. The other thing is also the risk of cybersecurity hacks. Security needs to be overcome. Now, having said that, there are technology advancements that currently give some protection, like for example, ensuring that before tokens are moved, it's whitelisted, AML, KYC requirements are complied with. FATF have come up with travel rule, ensuring that the same requirements with respect to movement of monies are applied with. And also when we talk about the earlier points about alignment of classification, there's a new working group which I'm party to, set up by the Court of Appeal in England, which is a newly created international task force to look at regulatory alignment and how we treat digital tokens, starting with 7 countries, UK, US, France, EU, Singapore, Australia. So we are 7 jurisdictions, Japan, looking at how do we align regulatory approach similar to what UK have done to the UK jurisdictional statement. So IOSCO as well, and I sit on the Financial Stability Board in Basel on G20 cross-border payment. Although we look at traditional cross-border payment, there's a lot of focus in how do we use technology to move monies. For example, tokenized deposits, CBDCs, as well as looking at stablecoins that are regulated to ensure same regulation, same risks, same regulations, and you must have the same regulatory approach.
Thank you for that, Tobias. You are in between. You are the entrepreneur, you have your own platform, and you're also dealing with institutional in some way. What, in your opinion, is the most promising partnership that could happen between financial institution or institutionals and the digital asset world?
Right. So basically, I think what we see from the institutional players, especially providing banking infrastructure, and then capital markets infrastructure. So we recently partnered up with, for example, with the Medat Group in the UAE, And they are seeking for solutions, not simply like tokenizing of securities, but also like linked to that, like collateral management, automatic LTV management for building also like more complex financial structures. So this is like, for example, a partnership where we can bring our capabilities. What we see in the future, which will come in more and more, are classic asset managers, right? BlackRock has tokenized their first money market fund. They bring out Bitcoin products as ETFs. They will look also into the tokenized space further than what they do with Securitize, we think. So there will be a lot of partnerships, actually announcement also coming from our side, but that's what we see in the space. I think the big banks and the bigger players, they are realized that this is really now actually there. And then we will see, like, we have seen like the first usage in Luxembourg. There will be more and more announcement in this space, and I think that's why it makes absolutely sense for companies like ours to enter into these kind of partnerships. And we build also now like a task solution, a tokenization as a service solution at STOKR, where we hired somebody who did like the same for the payment industry for Solaris Bank, like the product manager, and he's developing right now this kind of specific solution for the securities capital markets industry. So this will be like, also like a product where like this kind of you can leverage on these kind of partnerships.
So next is, if we look 10 years from here, what will be next? As we do not have a crystal ball, we'll be quite concise about it, but John, how should institutional investors think about the portfolio allocation to digital assets in the future?
Yeah, I think they look at it as one of their tools to look at it. If you look at right now, just look at BlackRock, right? They're going to allocate an increasing amount of what they are. And for us as well, if you look at what we have done publicly, we have done the first collateral mirroring with OKX using tokenized money market funds that gives you your interest overnight. And this is not over the 1 month. The holder of the tokenized money market funds gets its interest overnight. And that's, you can see it on your blockchain, and it's real time. So you will move in a world where real-time payments, interoperability, and atomic settlement is here to stay. And that means that the digitization of financial instrument is only going to increase.
And Bjørn, how do you see CBDCs impacting the competitive landscape as well, especially for cross-border payments and especially for fintechs?
Yeah, CBDCs is an interesting topic, and they move slower than the privately issued stablecoins, of course. But still, it's coming. We think that the digital euro, at least the wholesale one, will come, and it will add to that digitalization we spoke about. It will be an enabler for tokenization of real-world assets. We see that definitely. On the landscape, it could also mean that EMIs, PIs will get direct access to central bank money. So why do they need banks? Well, could they cut out banks? What will it mean for banks with CBDCs? And that's an interesting aspect. But on the other hand, it will add to start with some complexity, another rail of payments. But I think it will drive forward that initial idea of a lot of payments, a lot of transactions will be digitalized, will be on-chain in 10 years from now.
Okay. And Emilie, I think we discussed the evolution of the role of custodian. Do you think it will be the must-have in the future, or will we have alternatives to it? How do you see it reshaping in 10 years' time, what we currently know?
I'll keep it very short. As Bjørn mentioned earlier, I see that the custodians and banks will be working together, not as separately, but together. And then custodians would be probably providing the back-end technology to banks because, as Bjørn mentioned, the clients want to access their banks and then they want to see what's going on. They don't want to be accessing different platforms to see different assets. So that's how I see the future, and I'm running out of time. So
okay, so interoperability is definitely one of the main topic all the time. For many years now, nobody solved the issue, so quite an interesting one. Now it's time for the closing question. And if you look ahead 2 to 3 years from here, which of these technologies between tokenization, stablecoins, CBDC, or something totally new that we did not hear yet, you think will have the most transformative impact on traditional finance? So one single word, each of you. Tobias?
I mean, it's obviously security tokens, but obviously we need a leg, right? So CBDCs, we will see how they can integrate. In the moment, everybody is banking on private stablecoins, and I think it's a very interesting movement. We will see what's happening, but probably we don't need only one. Huh? Maybe we have like multiple choice, and that's also a good development. I think that's not a problem.
Okay, John?
Yeah, I think we will see the intersection between the adoption of AI and digital assets as well is really happening, where we use agentic AI to automate certain flows with programmability, interoperability, and atomicity of digital assets is here to stay.
Okay. Ami, what's your take?
Smart contracts, a bit similar to John. Then those features could cut off the middleman of all the middle back office and probably, yeah.
Okay, Bjørn?
Yeah, my 2 cents is that not only this year, but the next 2-3 years will be the years of stablecoins. I think they will have huge adoption. Imagine you live in Turkey, Argentina with high inflation. You want to trade that.
Well, definitely everything will change in over the next 2 to 3 years. So impatient to see you in 3 years and see what's really going on in the market and the infrastructure space. Thank you very much, and see you after if you want to have some chat with the speakers.